To build anything that truly lasts, it takes time.
Hello and welcome. You're watching Your Trades. I'm Kavita Thapliyal and with me is Ankur Mishra. And Ankur, it's been a quiet day today for the market. In fact, the start of the week has been really low, but then we've still managed to close flat and very strongly holding 25,450. But then if we go deeper into the market trade today, broader indices were marginally low, talking about the mid cap and the small cap were almost 0.2 and 0.4% down. But then among sectors, FMCG clearly was the hero today, index up by around 1.5%. Oil and gas also 0.5% up as far as closing is concerned. If we talk about the metal index, that was down 1%. IT index today also was on the loser side with almost 0.7% down. Metal index down almost the same number. But then when we talk about stock specific action, major losers were Tech Mahindra, Bharat Electronic, Ultratech, Cement, ONGC, Maruti Suzuki were among the major losers on the Nifty side. Also, if we look at HUL, Tata Consumer, Nestle, India, Reliance Industry and Eicher Motors were also the other names that joined the track today as far as the losers are concerned. But then having said that, if we look at the advanced decline, 1071 advances, 1687 declines. Top losers along with Eternal, Hindalco, Maruti Suzuki, the Nifty top losers I'm talking about, Grasim, HCL Tech, Hero Moto were the ones on the radar of almost top 10 losers. As far as gains are concerned, we saw Trent again 0.5% up in terms of closing after a very severe beating down session. But then what's up for tomorrow and how can we look at tomorrow's trade? What are the tips and tricks for tomorrow? We have Lakshmikant Shukla, technical analyst, institutional research, Yes Securities. Lakshmikant, hi, good evening. And the market has closed flat, but Nifty very strongly holding 25,450 on the bank Nifty. 57,940 is one very crucial level that we discussed in the morning as well. Technically on the charts, how do you look at this particular closing and what's going to be up on trade tomorrow in terms of Nifty and bank Nifty and your support levels?
Good evening, Kavita, and good evening, Ankur. Now, we have seen consolidation over the past week, and which is reflecting indecision. But overall, market is trading above its key short and long-term moving averages, and the broader uptrend is still intact on the upside. But if we look at the indicator RSI, which could go below the mark of 60, so which is showing a signal in the weakening strength of this market. On Friday sessions, Nifty has formed hammer candlestick pattern, so which is a sign of potential bullish reversal. But if we look at the today's sessions, then we have seen very quiet and muted kind of action in the market. And for this kind of reversal, we need a confirmation for moving on the upside. So if we look at the overall formation of the price chart, then Nifty has formed falling channel from where we have seen buying momentum from the lower levels. But if we look at the support, so support is still held near the levels of 25,250 to 25,300 zone, where 78.6 Fibonacci retracement was also seen in previous sessions. So we see that as long as it hold up the levels of 25,250 to 25,300 zone, so there is the possibility that we could see upside move in Nifty, but fresh buying momentum could only trigger once Nifty surpasses the levels of 25,610 to 25,670. So if we see breakthrough the levels of 25,670, then after market resume is upside momentum and it could push it higher toward the levels of 25,800, then eventually 26,000. So we could see the support and resistance for trading in the market until unless we won't see any decisive breakthrough above resistance and below support. we could see some sort of more consolidation in Indian market. While if we talk about Bank Nifty, so Bank Nifty is still trading about all its key moving averages. On Friday, it has found support from its 20 DMA, which is placed around the levels of 56,500. It has also formed bullish candle, but even in today's sessions, it has not crossed the key levels of 57,200, which is its immediate resistance. If it surpasses this level, then further upward could be seen in Bank Nifty toward the levels of 57,600, and then after 58,000 is on the card. So I think before giving the breakout, we could see some sort of consolidation in our market.
So consolidation is the key word here. A full day of fight between bulls and bears, and finally Nifty ended where it ended yesterday as well, just 0.3% up. But in terms of stock specific movement, there was a lot of movement today. What is your expectation? Any idea you want to give to the viewers? Any stock picks?
See, as we have seen consolidation in the indices, but there are few pockets where still buying is emerging. So from the lower levels, so we have picked two recommendations for giving in today's show. First one is Cummins India. So after few days of consolidation, this stock has found some sort of stability near its 20 DMA levels, and from there it has formed a bullish candle formation, and it has surpassed its 3 day swing high of 3,380 and also closed above the same. Now upcoming resistance is seen near the levels of 3,450, so which could be the buying trigger for this Cummins India. So one can go long in Cummins India around the levels of 3,330 to 3,320, and once it give a decisive breakthrough to the levels of 3,450, then we could see further acceleration in the buying momentum, which could push it higher toward our target of 3,630. So that would be the upcoming target for the Cummins India, and for taking long position in it, one should keep the stop loss of 3,330 in case of any correction. Second stock which is looking good, that is from pharma space. So on Friday we have seen the formation of bullish candle in Oro Pharma, and now today it has formed inside bar pattern. So overall structure looking is on the bullish territory as it surpassed its 50 DMA and also break its previous swing high of 1075. So we could see a breakthrough in this stock in the upcoming sessions once it surpasses the levels of 1200. Even at current levels, one can go long as risk reward ratio is favorable. So one should keep the stop loss of 1150 on the downside and can expect the target of 1230 in Arvindo Pharma.
All right, so Cummins India target is 3630, stop loss 3330, and Aurobindo Pharma over here target 1230, stop loss 1155. Thank you so much, Lakshmikant, for being on the show and helping our viewers and helping them strategize their trade for tomorrow. Thanks. But then let's get across Shrishti Sharma, who is there with us in the studio, and we'll be talking about technical charts and what's hot on the charts today. Shrishti.
Well, yes, we have got two counters for our viewers, one on the breakout side and the other one on the breakdown side is what we have spotted. Firstly, let's have a look at one of the breakout candidates, and that is Cummins India on the charts, because the stock was actually seen to be moving 2 to 3% higher in today's trading session, and a very good setup is what we have seen. It is a cup and handle breakout is what the stock is now forming. The stock did take a support exactly at its 20-day moving average, and on the derivative side, we have seen a long build-up happening for this particular counter, and hence we have chosen the stock as a breakout candidate for today. Moving on to the next one, and that is one of the breakdown stocks, and that is InfoEdge. Indeed, Naukri. Yes, the fundamental news flow did suggest that the revenues can see a blip of almost 35% on a sequential basis. But on the technical setup as well, what was interesting to see is that the stock faced rejection exactly from its 20-day moving average, forming a bearish engulfing pattern on the technical front, and also on the derivative side, we have seen shorts getting added into the system, and hence we did take this stock as a breakdown candidate for today. So these are the two stocks. Back to you.
All right, thanks Srishti for those two stocks. Moving on, Ajay Srivastav, CEO Dimensions Corporate Finance Services shows optimism on auto and farm segment. Let's listen into his rationale behind it.
There's only one auto company which is standing out among all peers. I think only one. You don't have to be genius to guess which one it is. And that's got traction with a serious kind, both on the farm side, both on the auto side. It's incredible story going out there. And I think, and that group has focused itself well. It has got value sitting in other companies. So by and large, their story fits into the narrative that they are gaining market share more than just the demand growth. And that's the narrative in the market. Demand is not growing as much as the thing. And you saw what happened in the retail story. We discussed last time when I was on the show that the retail companies are projecting obscene number of growth rate, and you saw it all came down. So market is not giving you the growth traction what the PE valuation is requiring them to do. And that is the dilemma of an investor today. Ps are telling you a story of 25% growth. Companies are growing at much less than that. So what are you going to do about it? Go with the SIP model and keep investing at this high rates, or sit quiet, wait, and then find a time when you can invest and make a good return out of equity markets.
All right, so that's the word from the Vice as far as the market trajectory is concerned. But then on to some Q1 updates in the FMCG space. Urban demand bounced back for Dabur with home and personal care plus healthcare showing strength, while Godrej Consumers growth was led by home care and GOM markets. So Jubilant Foodworks was steady with 17% revenue growth and 72 stores added. Snehi joins in with all the details.
Well, yes, so if you take a look at Q1 updates, we've got updates from major FMCG and consumption names. Let's start by looking at Dabur. Mixed to inline set of performance is what we would say for Dabur, because FMCG has seen a sequential recovery, but volumes have grown in urban markets, is what the company has said. And they're saying that the consolidated revenue will grow in low single digits, and consolidating operating margin profit will marginally lag revenue growth. Home and personal care is expected to have done well. Healthcare is expected to have posted double-digit growth. Beverages seem to be slightly impacted on the back of early monsoon, or because of which they were going to be focusing on the active portfolio going ahead. International business expected to post double-digit constant currency growth, and on the back of this, Nuvama has retained their buy rating with a target price of 615 rupees per share. For Godrej Consumers, a strong update is what the company has given. The consolidated business is expected to deliver double-digit rupee revenue growth and high single-digit underlying volume growth. So these are two positives for Godrej Consumer. But they're saying that the benefit of the palm oil price moderation that we have seen in the commodity pricing will only be seen in the second half of FY26. Home care is set to deliver double-digit value growth and underlying volume growth as well. Their international business flat UVG for Indonesia, but the GOM business is expected to do well. Nuvama has maintained their buy rating with a target price of 1460. Lastly, let's talk about Jubilant. Inline set of update is what the company has given. The provisional revenue is expected to grow at 17% year-on-year on a consolidated basis. Like-for-like growth for Domino's India at 11.6%. This is compared to 12.1% in Q4. Slight moderation seen here. And Domino's Turkey, a negative 2.2% like-for-like growth is what we're expecting to see. So slight negative coming over here as well. But they've added 72 stores on the group level in Q1. So inline set of numbers coming in for Jubilant. So that's the roundup on major consumption names that we've received over the weekend.
Indeed, and FMCG sector was the top performing sector today, and demand and growth will be steady for FMCG sector. It is believed by Amnish Agarwal of Prabhudas Leeladhar. He also talks about his top stocks from the sector. Let's listen in.
We believe that the benefits of decline in inflation, then your tax cuts, and the fact that the base is not great, it will start reflecting in improved demand across the board. Now, the increase in the volume growth for most of the companies, it will not be very sharp. It might happen at a very moderate pace, and the outlook remains reasonably positive given the fact that the monsoons are likely to be normal, inflation is under control, and tax rates have been cut, and also the interest rates have been cut. So we have been, you can say, very positive on Britannia. Lever has been, I would say, more like a trading bet with an upside up to say 2600, 2650. And on the staple side, ITC is another stock where we have been very positive. So it is having its own set of problems as of now. But given the fact that it's a beaten down stock, I think this is the one which seems to be very convincing at the present moment.
All right, let's move on, and we have our colleague Rabindra Degari now with all the stocks and news update with us. Rabindra, what's up?
Well, BEML is in focus where company has received two export order worth approximately USD 6.23 million, one from the CIS region for heavy duty bulldozer and a maiden order from the Uzbekistan for high performance motor graders. Apart from this, on back of Q1 update, Info Edge India is also in focus where company has announced their Q1 FY26 business update, and company's standalone billing was down by 35% on a sequential basis at rupees 644 crore as compared to 984 crore in Q4 FY25. Apart from this, Equitas Small Finance Bank is also in focus on back of their Q1 update, where bank says that the net slippages was up by 4.35% as compared to 3.16% on a sequential basis. Apart from this, on back of brokerage note, Petronet LNG is also in focus, where Motilal Oswal has come out with a note and they have upgraded the stock to buy from neutral rating and hike target price rupees 410. And lastly, telecom stock were also in focus on back of note, brokerage note. ICICI Security has come out with their note, and they have on Bharti Airtel they have maintained their hold rating and hike target price of rupees 1990. On Vodafone Idea they have maintained their hold rating with target price rupees 7. And for Bharti Hexacom and Indus Tower, for Bharti Hexacom they have downgraded the stock to reduce, and for Indus Tower they have downgraded Indus Tower to sell from reduced rating with unchanged target price of rupees 350. So back of this, telecom stock is also in focus.
Thanks, Ravinder, for that update. Niti Aayog has recommended a slew of measures to boost chemical industry. Let's go across to Sharad to know more about the proposed policy, interventions and potential impact by 2030.
A very interesting development coming in for the chemical sector as Niti Aayog has released its paper on the industry as well. Now this is important because this formulation paper has taken a lot of recommendations from the ecosystem, and this might be presented to the parliament as well, and this might lead to India's first PLI scheme for chemicals and a re-rating in the sector. Now, looking at the key details, the proposed policy, they are focusing on establishing a world-class chemical hubs and developing port infra and also giving an OPEC subsidy. Interestingly, they are expected to fast forward the environmental clearances and also secure FTAs to support the industries. There are key targets which are very important to know. First one is a net zero India trade balance in chemicals by 2030, a 5 to 6% production share in the global value chain, and almost 700,000 additional employment. Looking at the numbers, $220 to $280 billion of Indian production of chemicals and a $35 to $40 billion of additional exports as compared to the numbers in 2023. The OPEC subsidy would be 65,000 crore rupees over the next 5 years, and additional 3 lakh crore turnover is expected to come in from these incentives. Now looking at India and China, how does the overall global trade stands? India is coming in at exports of 3% and imports it's 5%. What's for China? It is roughly 23% and 12% respectively. So what would be India's chemical market consumption? As per the report, current size is roughly $220 billion. It can go up to almost $850 to $1,000 billion by 2040, with the India's share going up from 3.5% to 10 to 12%. Lastly, the segments looking at the growth, specialty, inorganic, petchem, all of them are looking to grow between 8 to 11% on a CAGR basis till 2040 as well.
All right, Shara, thank you so much for that update. But then let's get Snehi on board now. She joins in with all the cues to be watched on the T Street tomorrow.
Well, yes, lots of cues to watch out for. Not much happening on the macroeconomic front back home. But from Japan, we have current account data. Those numbers will come out, so watch out for that. In terms of corporate action and board meetings back home, you will have JSW Steel and Titan in focus because those stocks will be trading ex-dividend. And it's going to be the last day to buy the shares of Emphasis in order to be eligible for dividend to meet that record date requirement. In terms of annual general meetings, Voltas will be in focus, so watch out for if any important commentary is something that we can see from this AGM. And in terms of other events, you have French President Emmanuel Macron and UK Prime Minister Keir Starmer. They will be co-chairing the 37th Franco-British Summit, so watch out for this. And ASEAN foreign ministers will be meeting in Kuala Lumpur, so watch out for all of these cues very closely.
So a lot of cues to watch out for tomorrow, but with this we are completely out of time in this edition of Your Trade. Thanks for watching.
Goodbye.